my name is Joni Leverton, and I had the privilege of working on this very fun project with Leslie Lawrence, Chris Wilkerson, and Sony Matthews. Our firm is called Digby. We strive to maintain a presence in every market by creating sensors with an excellent design, high awareness, and easy accessibility. This organization has a strong R&D department that continues to keep its designs new and stimulating. We offer products that can keep up with the pace of the market with improved sizes and performance levels. Our prices remain at or above average. This is the basic specs for all the teams in the year 2014. This represents the results from the first year. Digby had an overall market share of 18.5%. We concentrated on investing in areas that helped us in the future years, such areas as automation and increasing capacity. This slide represents some basic specs for activity in year 2015. Digby had an overall market share of 22.45% that year. We also produced the largest amount of profit in comparison to the other teams. Go Team Digby! Our plant utilization is almost at 200%, and this shows that we needed to buy capacity, which we did for the next round. We created a product called Dazzle to capitalize our success into the high-end market, in which we had the highest market share in the industry at 28.76%. This slide represents some basic specs for activity in year 2016. Digby had an overall market share of 19.81% and again produced the largest amount of profit in comparison to the other teams. You will notice that Erie and Ferris are starting to benefit from the niche strategic plans with large market shares in the markets that they have chosen to base their business on. Erie is a low-end and traditional provider, while Ferris is a high-end performance and size market provider. This caused us to need to become more competitive, lower prices in the low end and traditional market. Digby refined their high-end performance and size market products to become more competitive. In year 2017, our sales continually steadily rose with an overall market share of 21.60%, again producing the largest amount of profit, with Chester very close to us on their numbers. They are becoming a force to reckon with in this round. The basic strategy of broadcast leader with a price at or below average is working well for them. We will lower our prices in the traditional and low-end market as the consumers in this segment value a low price, and it will help us stay competitive against both Chester and Erie. Plus, we created a traditional product called D-Light to pick up some more of the market share in this category. In the year 2018, sales are continuing to rise with an overall market share of 21.81%. Unfortunately, Erie overtook us on profit and Chester beat us on sales, but we are maintaining healthy growth rates in most areas. We created a product called D2 to capitalize upon our success in the size market. We made a mistake in the last round and priced D-Light too high. This will be corrected, and we should do better with this product in the next round. Year 2019 went to Chester as they overtook everyone in every area. We counteracted this by lowering our price in the traditional and low-end market. In the high-end, performance and size market, we perfected our products to become more competitive. Digby spent a lot of money in the previous years to become more competitive against Chester, and this worked in giving us the highest number of sales. But our costs were increased, so Chester still managed to beat us in profit creation. Our overall market share was good at 26.33%, and our size segment did well as always. This is our final round in which we placed second behind Chester. We could never regain them after year 2019. We still had a healthy cumulative profit of $173 million with an overall market share of 25.2%. In this round, we held on to too much cash as we had 137 days of working capital. We should have paid off more long-term debt and paid a higher stock dividend. This round shows how we had a competitive advantage with our size market at 34.26%. The creation of D2 worked well for us. Digby's final leverage score was 1.77. Our balanced scorecard gave us a 7.4 out of 8. We had challenges with this score and attempted to raise our leverage to at least 1.8 by increasing our borrowing of long and short-term debt after round 6. We used these funds to buy capacity and increase our automation. Digby's final cumulative profit was at $173 million. Our profit scorecard gave us a 9 out of 9. We did well in this segment, but not as well as Chester. Digby invested in our plant capacity, automation, HR, and TQM to become more efficient. Our final stock price was $136.17. Our balance scorecard gave us an 8 out of 8. Again, we did well on this segment, but not as well as Chester. We had a rise in our stock price from the creation of our profit every year and the payout of stock dividends in the last 3 rounds. The process of strategy evaluation is necessary for every organization. This process should involve an initiation of managerial questions, of expectations and assumptions, review of objectives and values, and stimulate creativity in the generation of alternative solutions and forming criteria for every evaluation. Management needs to be involved in this process on a continual basis rather than at the end of every fiscal year. It could be too late to fix a problem if you wait that long. One must be patient, as some strategies can take years to implement and results can take even longer to assess. Once a problem is noted, a manager should implement the determined corrective action quickly. Digby has been heavily involved in strategic evaluation after each round. Initially, Digby had a broad differentiator strategy, but converted to more of a broad cost leader to be able to compete effectively against Chester, which they still beat us. Even though we were creating high quality products, pricing appropriately, and marketing effectively, we noticed that our customer survey was lower than it should be. Initially, we raised the accounts receivable to 60 and saw a dramatic rise in our customer survey score, and our demand rose in the 6th round. In this next round after that, we increased the AR to 90 days, and our customer survey scores and demand increased even more. This helped us tremendously, but not enough. Thank you for taking the time to watch my presentation. I enjoyed the capism competition, even if I did lose to my dear friend Brian of the Evil Chester group. I'm now going to enjoy being a graduate. Thank you very much.